Yeah, Monday. What's up, everybody? Monday morning. It's October the 4th. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had a great weekend, was able to relax, spend some time with family, do some things that they love to do. What we're going to do today is we're going to take a look at our major markets, the S&P, the NASDAQ, crude oil, and gold, to look for potential tradable opportunities. And we are going to look at some of the levels that we looked at last night in our live trade room. So this is a little bit of a follow-up for those of you that were there with us last night. And starting first with the S&P. Now, in the S&P last night, we had talked about this potential long area down here. And we said that if the S&P makes it down into this area, you do have a good opportunity for a potential long, knowing that the overall trend of the markets is down. And so the only way that you can get into this position is if it traded halfway into the level and then you get long as it comes out of the zone. Now, I will tell you, my assumption was that it was going to make it down there right around the London Open, knowing I probably wasn't going to be awake to trade it. And if you weren't, don't feel like you've missed out on anything, because we're now 1, 2, 3, 4 candles in, and it's basically gone nowhere. So we're pretty close to the 6-candle rule. And so what does this tell us? Well, if this area of demand, which by all accounts is a pretty strong area of demand, was unable to hold, then that would tell me actually, and I'm going to remove this level here, I think that this actually now becomes a better breakdown candidate than anything else. As the markets open up, we will see a potential for the breakdown, remembering that our 4-hour trend is still a bit weaker. Now, we had looked last night at the NASDAQ, knowing that the NASDAQ area of demand was not a place to go long. But if we got a bounce out of here, this then, in my mind, became a good spot to go short on the bounce out of that level. Still showing a fair amount of weakness. I'm actually going to take this, and we looked at this last night. The markets, when I was looking at it, were right about here. I'm going to move this down to this wick over wick area. A wick over wick level below a pivot high are some of my favorite levels for short entries if price comes back into this region. So I think that you've got two pretty good setups on both the S&P and the NASDAQ. Now, once again, I'm following the 4-hour big picture trend direction. My 4-hour trend direction is indeed still down. We know that in order to get a trend change, we would have had to put in a higher swing low and a higher swing high. And it doesn't look like that demand area that we found is going to be strong enough to be able to put that in. So look for a potential breakdown below this 43.15 half. A reversal area does exist up here at 14,760. You could have a smaller breakdown on the NASDAQ below this 14,643. And if you do, then certainly you'd be looking down here. Now, remember this. We're in a 4-hour trend of being down, so any demand area has to be a confirmation long from this point forward. That would be the areas that I would most look at. Next, taking a look at the Russell, obviously very similar picture. Price did come into this level before bedtime, and this one actually was the cleanest of the levels for the reversal. But 1, 2, 3, 4, 5, 6 candles later, we'd gone nowhere. And in reality, it still has gone nowhere. So if you took this as a long, get out. There's no reason to stay in it. It's just chopping sideways. One of the things I say is if she ain't winked at you by 10 o'clock, she's probably not going to wink at you. Just go to bed. And yes, I say 10 o'clock. Nothing good happens after 10 a.m., kids. I don't care what anybody says. All right. So those are some of our equity markets. I'm continuing the bearish overall outlook, although I'm not bearish in the big picture, but my smaller time frame, my hourly chart being my swing trading perspective, I am going to maintain that overall perspective. Crude oil. OPEC's going to come out today and talk about crude oil inventories and what they plan on doing. So I think that until that happens, there's really not a trade to be made. There's not a great area of demand that's close enough to get long. You do have a potential breakout above 76.58, provided that we get the basing. And there's really no areas of supply for me to lean on, especially in the context of this bigger picture upward trend. Now, we are putting in a bit of a consolidation with some buying pressure on the last couple of candlesticks. But if OPEC comes out and says that they're going to increase inventory, I don't care how much technical analysis we've done, the inventory numbers are going to drive price. And so I would remain cautious on this one today, only taking very small time frame trades and not being in over an announcement. The next one would be gold. And looking at gold, we can see that we've had a very strong rally higher, creating a demand area down below. Now, we do have a supply area here up above us, and both of these levels, we can find them on the 15-minute chart. This area is a rally base, very strong drop, very strong move away. Set that up as a confirmation short upon a return to that level. And then you do have this rally base rally, the origin of this very strong move that we're coming close to. Now, the downside of this level, let me tighten this up to what it probably actually is. The downside of this level is that we are getting basing in front of the zone. My width of that level has to be this wide minimum. And so I've got a 1-to-1 reward to risk, and there's my opposing area. So while I think that's a pretty good level from a structural standpoint, it doesn't give me a lot of profit margin based upon this little bit of basing that we're seeing right through here. So I do need to be aware of that. Is it still valid? You bet your assets it is. But is it the most highly probable level and the best use of my capital? Quite possibly not. This little supply level up here that exists, I think, could also be a pretty strong turning point. So I'm going to remove this one at this point just because we're coming too close to it. DTM, dead to me, with this area of demand 1728 still very much in play. With that being said, those are kind of the setups that I have for today. I wanted to take a minute when I talk about our stock of the day, and I want to just go look at our FANG stocks. And why am I looking at the FANG stocks? Well, because these are oftentimes going to be the ones that are driving my markets, especially Apple, Amazon, Microsoft, Google, Netflix, Facebook, because they represent about 50% of the NASDAQ in general, right? So if these are continuing to show weakness, then the NASDAQ will also continue to show weakness. So you can start to look on these markets where they're going to come close to areas of demand on the daily chart to see if there's a potential for a turning point. And as I look at these, I'm not seeing really any quality demand super close, right? I mean, I've got some demand that's in the neighborhood, right? But I don't have any quality areas of demand that is wide open and super close for me to look to get long. Now, the Amazon level down here is fairly clean. The Apple has just put in a reversal candlestick pattern, but you don't have a level in my mind, an Apple, until right about here at that 135 area. And then Google, if we go look at the Googler, if I look at Google, my best area is not coming into play until down in here. We do have a zone right there that's coming pretty close. So my point behind this is that if I look at all of these stocks, right, these ones that drive my market, all of them have room to fall before coming into quality demand. Now, why is that important? Oops, that's not what I meant to do. That's important because when I look at the NASDAQ, I'm just going to go to the actual Qs themselves. When I go to the NASDAQ, you know, my area of demand that I'm sitting near, this little bitty level that we've got right here, that might be a decent area of demand. But if the components of the index aren't giving me the picture to go long, then the index itself is going to have a hard time getting long. I do like this area right here a bit better, because it's the prior area of resistance. Old resistance acts as new support. And we looked at this area yesterday in the NASDAQ on a bigger picture zone. So, you know, keep an eye on one of these levels down here. Look to see if when the NASDAQ gets to here, are my FANG stocks also reaching quality areas of demand. So that's all I have for today, everybody. I hope you guys have a phenomenal day. Don't forget, coming up on Friday of this week, is our Trader Summit. If you go to tradersarmy.com/Trader Summit, you can register. This is our full day trading session where you're going to hear from amazing trading experts, Corey Lane, Justin Krebs, Jared Tendler, Herman Casas, Brian King, Taylor Frame, Al Davidson. Friday, October the 8th. It's a full day, so please feel free to join us. I'll tell you what this is. This is a great day of understanding how we put together multiple time frames and multiple asset classes in cryptocurrencies, in stocks, in forex, in options, And really, it's going to be a good educational day. And we end the day drinking a beer. So what can go wrong with that? So make sure that you join us. Well, I'll tell you what this is not. This is not a sales pitch. Nobody is going to be selling a product that day. This is really just education. We want you to come out and have a good time and enjoy it. So, all right, buddy. Well, that's all I got. I will let you know. Go to tradersarmy.com/trader summit to register. It's limited to the first to the first 1,000 people that register because it's not an unlimited size room. And so please make sure that you register quickly and attend. All right. I'll talk to you soon, everybody. Have a great day. See ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.